for all of us, this is happening at such a speed that you can barely keep up. Because I think when we were talking in the beginning, we're like, well, imagine when you can put graphs in and it can read a graph. That happened in like 6 months after we, it's like, holy shit, and then, it's got perfect voice, and next it'll be video and you'll be speaking to me. This is all coming at such a speed that's hard to get our heads around, but what a time to be alive. It's all part of the same thing. It's this new digital world that we're moving into that is entirely new, and it has its own system of money. It has its own system of truth. It has its own ledger system. It has its own everything, and it has its own intelligence, and it has its own physicality. I mean, that's what we're moving into. It's a whole new world.
Hey guys, welcome to Everyday Finance. After breaking through the $120,000 obstacle, Bitcoin has reached new highs, briefly reaching $123,000. Ethereum, meanwhile, remains stable at $3,000. And the entire value of the cryptocurrency market is close to $3.6 trillion. This abrupt action coincides with U.S. politicians advancing crypto legislation, including stablecoin frameworks, in the face of growing institutional interest, global liquidity, and the demand for AI-related infrastructure, all of which are driving up the value of digital assets. Raoul Pal and Jordi Visser are advocating for a game-changing bull run in opposition to this momentum. Pal believes that this is more than just another cycle, and that it will continue well into the upcoming year due to factors including investor maturity, global money flows, and the strengthening ties between traditional finance, artificial intelligence, and cryptocurrency. $500,000 due to limited supply and residual leverage from past cycles. He thinks it might very immediately reprice the whole cryptocurrency market when it hits. We dissect their perspective, the factors causing the surge, and the implications. For those who are still waiting on the sidelines in this video, to keep ahead of the curve, make sure to subscribe, like, and share.
Yeah, I still do because of debasement and what that drives. But in the end, where I get to in all of this is somewhere down the line, the marginal cost of electricity will go to zero. Mm-hmm. And therefore, you have infinite abundance of intelligence plus humanoids. And so what is money at that point?
Well, now you're getting into the point. If I told you, and I'm not predicting this, although in the back of my mind, I've decided, I don't know if you've ever done this, I've decided not to predict publicly where I think Bitcoin's going to go. But I do think the second half of this year will be a explosive up move. And I say explosive because I believe the most important thing that happened in the first half of the year was what Sundar Pichai said on the Lex Fridman podcast and also at the Google I.O. developer. When he said that from a year ago, we were up 50 times in token usage. Okay. Now, if you ask 100 people on Wall Street, what's a token with inside AI, 99 of them won't know what it is unless you go specifically to the tech world. When I hear tokens, I think AI adoption, I think inference, I think reasoning, I think AI agents are just starting. AI agents to me are the most powerful force for productivity and job losses in terms of the going through. But it is massively powerful for Stripe. They should see exponential growth in stablecoin transactions. And you're seeing this, like the stablecoin adoption is happening at the same time. I just don't think people yet know on the wealthy side know how to translate tokens to stablecoins, to Bitcoin, to Ethereum, to the power needed to fund all of that. But I think that's what we're going to learn. And I think that is an anti-fiat situation. I think it's fine. They'll go up together. But if Bitcoin were to go to, say, 500,000 by the end of this year, not predicting, I'm just saying if it did, because of a short squeeze, which I think is going to happen at some point from all the people realizing that it is a finite asset and there are people that need to borrow on it because they got in trouble from 21, 22 and they're borrowing future production and blah, blah, blah. I've now gone through this. If we get a spike, well, that'll put it at $10 trillion in terms of Bitcoin. You'll have the entire ecosystem go up. I don't think the fiat system will see that type of growth in terms of this. And once that's moving at that speed, I think everyone from the investor world is going to start looking at how to participate at a time that wallets are easier to open, and we're starting to see more and more. So I just have this belief that instead of this being a boom, I view this as a disruptive shift in money that has to happen at a time, not when the fiat system's doing well, but when the crypto thing is doing so well, and it's not based on speculation, it's based on the transfer of money.
Yeah, and I've always said it was a parallel financial system that got built, and we're now migrating across. And what we're about to do is migrate the cash system onto stablecoins. I mean, it's staggering, but it's coming. And when you've got the government talking about deficit financing, and everyone kind of knows that it's debasement, it'll only accelerate the adoption curve because it is the only way out. It's this capitalism eating capitalism. Well, here's the newest form, and it's going to happen, and nothing will stop it.
That's why I think we are. I think all the turning points right now are that capitalism is eating capitalism, and rather than it be a bearish argument for assets, it's not. But I think the pie of assets, the shift should be happening to a different system. And I think that's a very different argument, and I think it'll bring wealthy people in, because then FOMO will set in, greed will fit in, and it'll be more towards the crypto world. And that's why I think Circle's important. I think CoreWeave's IPO is important. I think Core Scientific. You're seeing it in the traditional finance side. And when I hear people say, well, I think Bitcoin's not going up because people are moving into Circle, and I'm like, I don't know what you guys are talking about, but that's not the way it works. I just think the Ethereum side and the power side, the whole energy, all of the transactions, I thought the token side is big.
Interconnectedness of everything. That's what people don't yet see. And what you're talking about is it's all part of the same thing. It's this new digital world that we're moving into that is entirely new. And it has its own system of money. It has its own system of truth. It has its own ledger system. It has its own everything. And it has its own intelligence. And it has its own physicality. I mean, that's what we're moving into. It's a whole new world.
Yep. And transactions and volumes are going to spike. And AI was the bridge to this. And this is why when I decided not to stay in the hedge fund world, it was, let me try to talk about the traditional finance world through AI bridging to the new digital world. And it's an accelerant in this whole thing. And the AI agents is the most important thing because it gets to inference and reasoning, which then feeds into humanoids and everything else. You can't have humanoids, you can't have full self-driving, true full self-driving, you can't have all the other things without first getting digital employees, which is where the agent world is, and they need to transact with each other. And that's the phase that we know we're accelerating at right now. So
because right now energy isn't free and you have to pay the agent for the energy use. You know, it all comes round. It all fits together perfectly. As ever, Geordie, fabulous conversation. And I look forward to catching up the next time we do this as well, because things are moving so fast. We both talked about exponentials, but for all of us, this is happening at such a speed that you can barely keep up. Because I think when we were talking in the beginning, we're like, well, imagine when you can put graphs in and it can read a graph. That happened in like 6 months after it's like, holy shit, and then, it's got perfect voice, and next it'll be video and you'll be speaking to me. This is all coming at such a speed that's hard to get our heads around, but what a time to be alive.
It's a great time to be alive. And just for people that want to do something for their kids, just get them to use it. And I think Raoul's point is the same one I did, which is the voice. But with inside the voice, I also said one more thing. If you haven't built an app in Cursor, the paper I'm writing right now is based on Peter Diamandis' X Prize that he created a long time ago, which was meant for people to create and finish a project and to give them $1 million. Well, I think with your kids, if they go build something in Cursor, which they can just do with natural language, I think it will not only give them pride and joy, it will also set them up for using AI more and more, not just to use it as a chatbot, but to actually use it to build things. And I think that's the most important thing for the kids out there.
Amazing.
According to Raoul Pal, a whole new era of capital generation has begun. One in which speculating is not only acceptable but necessary, contends that instead of gambling for enjoyment, today's youths are redistributing risk in a financial system that has effectively excluded them. Data from Jordi Visser supports this, demonstrating that despite a fall in car purchases, gambling-related spending in the U.S. has increased to over $200 billion yearly, indicating a substantial shift in priorities. For the younger generation, Cryptocurrency is more than just another asset class. It's the only market that offers them personal control, real-time access, and the possibility of asymmetric gain. However, this change isn't only cultural. There's also a shift in institutional sentiment. Stablecoins are evolving into working capital tools. Regulators are finally shifting towards more transparent frameworks, and Bitcoin is increasingly being viewed as a treasury reserve asset. Visser likens the present cryptocurrency market to the post-dot-com crash period of the early 2000s, which was marked by disillusionment, but ultimately saw a significant amount of innovation. He thinks that the surplus supply and indifference from the 2002-12022 cycle are currently weighing on cryptocurrency. However, a quick global repricing may occur whenever important assets like Ethereum and Solana surpass their previous highs and network effects resume. He cautions that a significant short squeeze is becoming more likely rather than merely possible. This sets the stage for a much more extensive discussion on our future. Why hasn't the ISM recovered? Why is energy use turning into such a crucial macro factor? And what if the growth of AI infrastructure puts strain on the monetary and fiscal systems? Pal and Visser delve deeply into these issues in the second half of their presentation, illustrating a future in which energy infrastructure, AI, and crypto rails converge and where rising need for computation power, automation, and intelligence is met by declining capital costs. Let's resume our conversation.
Yeah, I mean, I've used it for quite complicated macro thinking. And the big change for me is it now basically uses what we've always used, which is a probabilistic framework for long-term or longer-term forecasting for markets or whatever. And it couldn't do that before. And now it's really be able to join the dots, which is as macro people, that's all we do is we happen to join dots and keep this big picture in our head, mental picture, and try and fit it all together. It's getting a lot better at that now. I mean, better than 90% of most macro people now.
Yeah, and the reason, and you hit on it, I mean, a year ago, the search component was not really a part of it. So without having really good access to information over the last 6 months, having the history back a long time in the training model was not useful for someone in the markets. But now having the ability of looking at what's been coming out recently, connect it, I use deep research constantly to create reports for me of ideas that I want. And I remember I was at a hedge fund. You'll appreciate this. So I went to go do a demo. They had a firewall up. Their employees could not use any of the LLMs. They had an aggregator software, which gave them access to some of the older models all within there, but they didn't have access to the tools, the projects, all the things that enable you to do things with it that make your life better. But the reason this was important is because as I was sitting there and I was doing a demo for them and I showed how much, one of them said, oh, I wanted to go through the SLR change and I wanted to see what the bank CEOs had said and if there was any commentary. First of all, you couldn't have done that 6 months ago. But when they did it, they got nothing. I showed them the prompt that I used, how I used the deep research side, the reasoning model as opposed to just the general. And they weren't even using 4.0, it was 3.5. And by the time it was done, I asked for a 2-page report. It had everything that the person wanted. And that's where we are with this, is that if you don't play with it, if you don't use it, if you haven't created your own prompt templates, there's just no way to get the full grasp of it. And I think human beings like the concept of having a software tool. And this is not a software tool. This literally is your assistant. You have to learn to speak to it to get the answers. You have to learn to give it more details. And then once you get an answer, you have to continue with the next question. It doesn't give you the answer you want. You have to keep going and going and going. And that's the beauty of it.
But we're not far away from it knowing you, because of your projects and all of the questions, that it will just prompt you and say, Geordie, this is interesting for you because I know how you're looking at this. This falls within that category. This might be an interesting opportunity. That's not far away.
And to some degree, and you know this too, it's already there at a minute level. When I write, I have a particular style. I personalize things. I bring in my own experiences into it. So it's already at the point now where I don't have to upload all of my papers and say, hey, here's the style of writing that I am, just see if you can go through it. Now I just write something and I say, Yeah, change it a little bit, make it in my tone, and then it comes out in my tone, and then I go through the editing process, but it already knows who I am. And if I asked it, which I did recently because someone requested my consulting services and said, "Hey, will you do you think you could work for the college for a brief period of time and help us kind of adapt to how we need to integrate AI into the curriculum?" And I went in and said, okay, who would be a good person for this? And it put me up. So again, it's starting to know who I am, what I do, and everything
Have
else.
you have you done that? Have you given it your writing? Because I've not done that, and I've got a graduate student who's at London School of Economics, and he's working at 0.72 for his summer job. And after that, I said, can you just dump all of 20 years of GMI into a model for me? Have you done that? I mean, because all of this is behind the paywall. I mean, there's plenty of my writing that isn't, but most of it's behind the paywall.
So I did that on Claude very, very early, meaning I want to say that was late 23, maybe September of 23. I didn't like the way it did things. Like it wasn't truly in my tone. Now it just has all my writings because everything that I write, I use ChatGPT as an editor. I use it as a brainstorming tool. I showed a college graduate how I used it to write a paper while they sat next to me. So I said, so I come up with an idea. Now watch how it happens. And so I spoke to it and I said, for the first paragraph, let's do this. For the second paragraph, let's do this. For the third paragraph, let's do this. And then I started conversing. I want it to be another 3 paragraphs. Give me some ideas on how I could continue from here and expand it based on things that I've talked about over the last month. And that's where this stuff goes, is that every idea that I come up with, everything I put into ChatGPT. So ChatGPT is the model that I use for brainstorming. It's the model I use for building things. Perplexity's for finance. Gemini is actually a backup check at this point. I'm about to integrate it and do some stuff with Gmail. And then I use Notebook in a similar way that you said, but you certainly can do that without a problem. You can have it trained on whatever you want. I call them knowledge brains and they're phenomenal to have, but I did that a long time ago. Now everything I write starts in there, so it has access to all my information.
As the financial engine underpinning the next generation of technologies, cryptocurrency is emerging from the shadows of the rapidly changing global economy. The drive to construct enormous data centers, fortify semiconductor supply chains, and increase energy infrastructure is quickening as governments prepare for the AI arms race. The speed, flexibility, and liquidity needed for this transition are simply too much for traditional finance, which is where cryptocurrency comes in. It is becoming the native financial layer for a constantly evolving, intelligence-driven digital economy, no longer merely an alternative asset. According to Jordi Visser, this change will cause the cryptocurrency markets to completely repricing due to solid fundamentals, such as the growing use of Ethereum infrastructure, the expanding adoption of stablecoins, institutional demand for robust digital assets like Bitcoin, and a significant shift in the energy and computing industries. His prediction that Bitcoin will reach $500,000 isn't a gimmick. Rather, it's grounded in the mechanics where a supply-side short squeeze and the removal of outdated leverage creates space for fresh investment to pursue actual on-chain value. Raoul Pal expands on the idea, claiming that current bull cycle will last longer than most people anticipate because cryptocurrency is finally balancing with the broader economic system, not because of retail hysteria. An established liquid and more regulated cryptocurrency ecosystem awaits investors looking for growth across the risk curve as interest rates decline and global liquidity improves. There is no denying the parallel to the early internet, but this time the funding is ready and the infrastructure is operational. This is not the time to wait and see, investors who are paying attention. Already the transition to a parallel financial system is under motion. Ahead of the curve is already being set by those who are aware of the deeper dynamics at play, such as artificial intelligence, monetary easing, power limits, and the emergence of programmable capital. Remember to like the video, subscribe, and leave a comment if you're seeing this metamorphosis take place. Is this cryptocurrency's last departure from the status quo, or is the largest shift still to come?